Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined this week by our regular team of Paul, Dan and Nicole. And of course, back from Expo, a lot of discussion around some of the positive sides in terms of the fundamentals, but also some of the bigger challenges that there are in the market. And some of those are plainly only set to grow. ESG was a very big topic. And Paul, there was also a focus as well on that from the ULI recently. But what have you been watching over the week?
Well, the Expo figures are out. So the attendance was 60% up on 2021. Obviously, that was an exceptional year, but it was almost 45,000 visitors from 73 countries, and it was almost up to 2019 figure of 46,747 from 76 countries. Then elsewhere, the Urban Land Institute, as you mentioned, is warning of a carbon bubble in European real estate pricing and is urging industry members to work together to preserve values while buildings are decarbonised. The ULI said in a statement, while almost everybody in the industry acknowledges the need to decarbonise the built environment in Europe, the cost of doing nothing, given the current lack of regulation driving change, is currently not factored into property valuations, and that therefore current building values are too high, which is the carbon bubble that they're talking about. And they're saying if transition risk costs are not factored in by owners now, then the industry could face a major crisis, and the bubble could burst because of a change in regulation or an economic shock. And there have been enough of those to go around lately. So the ULI said this may happen sooner rather than later, owing to the current energy crisis, which could affect tenants' ability to pay. So the ULI's published transition risk assessment consultation guidelines to support the more collaborative approach that it's recommending. Then there have been some transaction stories, but rather fewer of them. However, of significance to the London market is the announcement that Blackstone has to occupy a purpose-built European headquarters on Berkeley Square next to its existing HQ. The company's going to take a lease on a 226,000 square foot building on the site currently occupied by Lansdowne House. And the building is expected to be complete by 2028, and it's already got planning permission and includes 14,000 square feet of ground floor retail. Blackstone said the decision to lease the building reflects its significant commitment to further growth in Europe. It's also got offices in Dublin, Frankfurt, Luxembourg, Milan and Paris. And obviously, Blackstone is a large investor in the UK, having invested $27 billion over the past 20 years, which it says is supporting 40,000 jobs.
The focus there around ESG certainly came through at EXPO Real in the sessions we had, especially the one with Redevco, Clemens Brenningmeier, certainly, and that focus around collaboration being key, but also just how swiftly things are moving. I mean, we've moved from there being a kind of brown discount to now this view that actually there's potentially a pricing bubble related to carbon. So just interesting to see how quickly that discussion is moving on. Dan, what have you been tracking?
Well, Paul mentioned a few stories that have come across from the US there, but another one that we've been tracking particularly is Simon Property Group. They've bought a 50% stake in Jamestown. They're the global real estate manager, and they've agreed to acquire the interest from the founding partners, Christoph and Ute Karl, who are going to remain as shareholders. But Jamestown will operate independently. A bit of a backstory on Jamestown. I mean, they were founded in 1983, and they've got assets under management of 13.5 billion euros in markets across the US, Latin America, and Europe. But Jamestown's current and previous projects include One Times Square and Chelsea Market in New York, and the Innovation and Design buildings in Boston and Lisbon, as well as assets in Rotterdam. So, it's quite an interesting move. I mean, Simon now owns or has an interest in about 230 properties, which comprises 186 million square feet in North America, Asia, and Europe. Remember, it also has a 22.4% ownership interest in Klépierre, the Paris-based REIT, which owns shopping centres in 14 European countries as well. While Simon were sort of widely impacted by the COVID pandemic, as everybody was, it's already recovering pretty well, and occupancy currently sits at 93.9% at the end of June this year, compared to 91.8% the previous year. But the company clearly sees value in itself as well, because it's also recently repurchased 1.4 million of its own shares in common stock. It's quite an interesting move from Simon. Elsewhere, there was further confirmation of M&S's radical turnaround and restructuring plan. You'll remember that was first mooted back in May 2018, talking about store closures, but it's hit the headlines last week again, mainly because it's put a figure on that now, and it's actually going to be closing a quarter of their stores that sell clothing and homeware due to increased pressure, mainly from online. In a more positive statement, they also said that they would be opening 100 new Simply Food outlets as well, and that's all due to their turnaround plan to a difficult economic backdrop. There are brands that are coming into the UK, and Sephora is one of those who are returning to the UK. They're mooted to be opening a new London store in spring 2023, which is great news, really. And recently, Sephora also bought an online beauty store, Feel Unique, last year for £135 million. Lastly, Apple have signed a further chunk of space at 22 Bishopsgate. It's actually going to extend their total lease with Bishopsgate up to 200,000 square feet. They're taking a further 76,000 square feet. The Landmark Tower now is about 60% leased or under offer, but it's in addition, of course, to probably the bigger story from last week. It's in addition to their agreed new campus at Battersea, where Apple is positioned in the central boiler house space, where 1,400 of their employees will be ultimately be moved. And of course, Battersea opened on Friday.
Yeah, and Nicole, you were our roving reporter at Battersea for us.
Yes, it's been a weekend of festivities for Battersea, grand reopening after a 10-year project, which cost £9 billion. A huge project, as we've seen, obviously, the residential buildings built by various star architects like Frank Gehry and Foster and Partners have already sprung up, and some of them, quite a few of them already lived in. But the grand opening at the main building, the iconic Battersea Power Station, which was built in the early 30s and had been producing a fifth of London's electricity for many decades. It was powering the Houses of Parliament and Buckingham Palace until it was decommissioned in 1983. And since then, there were decades of sort of plans that never got completed, ideas and so on, until this Malaysian consortium came in 2012 and bought the place for 400 million and invested, as I was saying, £9 billion since. And now it's open. It's London's most spectacular mixed-use neighbourhood, a mixed-use building. It is a commercial centre. The main turbine hall, it's so huge that it could fit St Paul's Cathedral inside. It's a shopping centre, and so is the second turbine hall with all sorts of brands and shops, not all high-end luxury. It's a real mixture. And also the consortium made sure they had a lot of local businesses, so that there are about 40 stores that are just there. And of course, there are the offices. Apple has, as mentioned, has taken 50,000 square meters. It's going to be its European headquarters over 6 floors. And the Apple CEO, Tim Cook, said he was very proud to be part of such a wonderful project, which he said made London proud. And there are other offices as well, including some with river views that are going to be leased. And the Malaysian consortium is expecting to receive about £100 million a year in commercial rents. Then there are shops, a theatre, a hotel, and also a residential component on the very top. There are about 28 flats and 18 sky villas, as they call them, which are actually on the very top, where have a shared roof garden on the very top of Battersea Power Station, and they cost about 7 million. So a real mixed use. Obviously, there are hundreds of, about 250 between bars, cafes, and restaurant, including a cocktail bar in what used to be the control room. Obviously, it's a grade 2 listed building, so all the restoration work had to be done with the approval of English Heritage, so it was a very complex renovation project. So all the original features have been kept, including the control panel is now the backdrop for the cocktail bar with, they say, electricity themed cocktails. Whether the shock is actually when you get the bill or not, I don't know.
Thank you, Nicole. Thank you, Paul. Thank you, Dan. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.